if you opened up your portfolio today and felt physical pain, look, you're not alone. Bitcoin altcoins are getting smashed harder than at any point since the FTX collapse. A lot of altcoins are actually under the FTX lows. The scary part, some of the sell-off might not even be about crypto, but maybe more about the US stock market, and fears arising over 50 different things in the AI market. So given the health of our crypto markets are somewhat tied to the health of the larger equity markets, today, let's dive in to the big boy, the big daddy of them all, the S&P 500. Boo, boring lark, I know. Stick with me, it's gonna be important, okay? We'll take a look at what's happening on the charts technically, okay, from a technical analysis perspective. Then we're gonna line up some bullish and bearish arguments from some of the biggest names, leading market experts out there, okay? This is gonna be a real interesting one, so make sure to strap in, we're gonna have a good time. Finally, we're gonna be talking about kind of conclusions we can actually try to draw from all of this noise to get a bit of signal. Let's get started with the technical analysis. So zooming in, just here a little bit on the daily, I think the major thing to watch right now is whether the S&P 500 can continue to hold above 6,550. If the S&P can stay above this line, and by the time you see this video, you will know the answer to that or not, okay? We're recording this about 2 days in advance. If the S&P can stay above this line, then it will have an opportunity to consolidate and shoot for a higher high. However, if we lose that line, that means we're putting in a fairly major local low, which then starts to beg the question, the fear creeps in. How low can we actually go? Now, we're on the weekly here, but the ultimate point I want to make is that the S&P 500, and you could say the same for the NASDAQ 100 or the Dow Jones or the Russell, whatever, they generally like to take 3 steps forward, 1 step back. Therefore, you generally want to be long on stocks all the time and just add more on dips, except in the face of huge corrections or bear markets. What I'm showing here from 2022, it's an example. One of the best ways to spot these larger corrections is noticing a pattern of lower lows and lower highs on the chart, AKA a downtrend, okay? That's why I'm emphasizing right now this 6,550 price point, because closes below that start to become very problematic for the charts. It begins to print larger, lower lows, which is a red flag that needs to be paid attention to. Now, zooming back out on the weekly since 2018, I do think we have a major support trend line that starts from the COVID lows and connects with the 2022 bottom and almost connects with the 2025 tariff bottom. So that line is coming in as support at 5,050. Now, if we get down there, hold on to your butts. It's not going to be pretty. Concerning major resistance lines, it feels a bit arbitrary on this chart to try to find a good fit, but there might be one from the 2018 top to the 2021 top, and you can see that trend line is splitting through our price action right now. So it'll be interesting to see if we get some closes above or below that line. But overall, this chart definitely on the higher end of the range, isn't it? A little bit topishy, at least short-term local top, not like macro top for the centuries, right? But if you add on the RSI, you'll find some big bearish divergences on the weekly with a bearish crossover happening on the weekly MACD right now. Those things are not good and generally would say that the stock market's more likely to have a correction. Not to say a bear market's got to come, but a cooling off period. Things can always surprise. NVIDIA earnings are mega strong. Everyone just goes crazy again. But just looking at the US stock market, TA zoomed out, it looks toppish currently. Okay, short term, local top, right? But for more immediate signals, watch for daily or weekly closes above or below 6,550. That will be the determining line. Now, I want to do a roundup with you on what the stock market experts are currently saying about the valuations of equities. Let's start with the dirty, nasty bears. But first, guys, do you want to come and meet me? Listen to awesome speakers like Michael Saylor. Well, go grab yourselves a ticket for the Abu Dhabi Bitcoin Conference. It's going to be a chance to talk to fellow Bitcoiners, commiserate over the lame markets and the bad prices. It's going to be a good vibe. The speakers are amazing. It's fantastic. Come to Abu Dhabi, and guess what? If you use the link right down below here, you're going to get 10% off your ticket when using the link. If you haven't been to these kind of conferences before, they're amazing for networking, amazing for meeting fellow people and people in the community. So go check it out, link down below. So, the bears. First, Mr. Bear himself, Michael Burry. He's aggressively bearish on AI right now. Okay, he believes it's a classic speculative bubble, the biggest he's ever seen. And this guy's the guy who called the subprime mortgage a few years early, though. Propped up, of course, by accounting fraud, hyperscalers, Meta, Oracle, Microsoft, Google. Everyone's artificially extending GPU server useful life from 2 to 3 years to 5 to 6 years. He's calling BS, massively understating The depreciation is not a good thing, inflating reported earnings by billions. It's all a big fugazi with the AI thing right now, as well as rapid hardware obsolescence, insane capex with no real profitability yet, and even circular deals with NVIDIA, OpenAI, Microsoft, kind of, this snake eating its own tail sort of thing. That makes the whole boom look artificially concentrated and fragile. His bet, okay, according to his most recent filings, huge short bets on Palantir and huge short bets on NVIDIA. Palantir is his biggest short position, by the way. He's literally going all in. Personal fortune on AI cracking hard, just like he did in 2007, 2008. Palantir CEO Alex Karp called it batshit crazy. Alex Karp, what a character. Mr. Geographically Monogamous. Anyway, that's a different story. If NVIDIA and Palantir drop 40 to 50%, Burry is going to literally make multiple billions off of this. It could be his magnum opus. If these stocks keep ripping, he gets obliterated again. Remember, Michael Burry told everybody to sell at the dead, cold, rock-hard bottom of 2022's bear market. Next up, Mike McGlone. McGlone has been on the bullhorn about bear horn, maybe we could say, about the risks of mean reversion and deflation for a while now. By mean reversion, Mike is saying that stocks and cryptos are overvalued from the historical averages and therefore we're due for a correction back to those averages. Now, concerning deflation, Mike calls it post-inflation delation, and basically he's focused on the relationship between gold, crude oil, and copper. And he concludes that the relationship between these three commodities right now is signaling more downside risks for stocks and crypto. Now, our final bear, of course, is none other than gold bug Peter Schiff, who has been famously hating Bitcoin forever. Basically, Peter believes that the US stock markets are in a massive inflation-fueled bubble that's been fueled further with all the AI hype. That's a quick summary of the bears. There's more. You can find lots of bearish takes if you want. Now let's turn over to the bulls. First, Gigabull Tom Lee, everyone's Korean quant. So he's gotten a lot of his bullish calls pretty spot on over the past few years. He's still singing the same tune. On November 11th, Tom Lee reiterated his call for a bullish run in stocks through the end of the year, citing all kinds of great tailwinds, a December rate cut, US government reopening, all the kind of stuff we talk about here on the channel all the time. And just a few days ago, Tom said this on CNBC.
To me, between now and year end, I'm pretty bullish on stocks. This sort of weakness in the first half of November was what we expected. But as markets rally, I think that's going to help propel Bitcoin to an all-time high.
Okay, next bull, Director of Global Macro at Fidelity, Jurrien Timmer. Now, while he has become a bit more guarded in his bullishness lately, generally speaking, Timmer does a lot of pushing back on all the stocks and AI in a bubble kind of narrative stuff, arguing instead that while stocks are elevated, they're not at extreme bubble territory levels yet. They would need to go much higher. Our final bull here, James Thorne, he's the Chief Market Strategist over at Wellington Atlas. So, essentially, Thorpe thinks that the current AI investments aren't even remotely close to bubble territory. We've talked about this quite a few times, not this guy's particular take, but that we'd have to go a heck of a lot higher and that earnings and valuations would have to really diverge in a much bigger way to say this is a crazy bubble. Anyway, he goes on because the amount of money that's been poured into the AI currently pales comparison to the benefits that AI will deliver. Interestingly, Thorne's also a big fan of Bitcoin. Right now, he's advocating for investors to buy this dip. So that's where our big bulls and big bears are at right now. Everybody's got it out. Everyone's laid it on the table, trying to see who's the biggest. So after looking at all that, it appears that the central question for equity valuations right now, which of course this will have secondary effects on Bitcoin, is whether current AI valuations are truly overextended or not. People have big bets both ways. If we can get a handle on this question, then perhaps we'll get a better idea on where US equities are headed from here. Technicals are showing that maybe we got a local top coming in short term for stocks. The bulls are saying, don't worry about that bullshit. We're going a lot higher. The bears are saying the sky is falling. Here's the thing in investing, especially when it comes to stocks. 10-year time frame horizon people basically always win. There are no guarantees, obviously, in markets. But if you have long-term perspective, you're going to do well. You buy dips, you keep stacking, you'll be fine. The bears are right once in a while, and then they gloat about it for years on end. But the optimists are right much more often and make way more money. Thanks for watching.